Talking about the bill, let's go to talk about First Solar, which got hit, what's it, Wednesday?
Thursday.
Thursday. Oh,
Thursday.
yesterday.
And it actually,
Thursday.
it got hit, but not as bad. And what happened is through this bill, the legislation actually ends tax credits for installers of solar that lease equipment to customers. The bill also ends the investment and electricity production credits for clean energy facilities that begin construction 60 days after legislation is enacted or enter service after December 31st, 2028. We're talking about First Solar here. They were hit by about 4 or 5%, but Sunrun, an actual installer, they were down like 40% on Thursday. So,
yeah.
I mean, that was a major hit to them.
And I think I heard the year 2028 that goes in effect.
For parts of it. So it seems like the installation from Sunrun, they're going to get hit pretty quickly here. And that's why First Solar didn't get hit as hard, as they're actually not installers. They make solar panels, and they actually didn't have their manufacturing credit. That was unscathed. So they are still a benefactor of, I'm going to call it the Inflation Reduction Act. That didn't change for them. They're still benefiting from tax credits.
And I know this came out a couple of days ago, but I do see that maybe this happened recently, but the shorts on First Solar is 13.2%, which above 10%, we get kind of concerned that there's some problems there. First Solar, their symbol is FSLR. They do have 97% institutional ownership. Gotta love the PE ratio. It's a 13.5. The industry has no PE ratio because no earnings out of the industry average there. Price of sales is expensive though, 4 versus 1. Price to book value 2.1 versus 2.8. Price to cash flow is 49.7 versus 71.7. And the PEG ratio looks really good, 0.2 versus 0.8. So you're not paying very much at all for the future growth of this company. Now, over the last year, earnings for First Solar are up 23.4%, which is very good. But the industry is up 77%, and sales for First Solar, now they were up 19.4%, but the industry only up 0.7%. So that growth in earnings in the industry could be something else kind of crazy there. Gotta love this, and this could change going forward because of recent things that are happening here. 5-year estimated growth rate from the analyst was 43.1% for First Solar versus 18.6% for the industry. My guess is we could see that come down because that's just very high. But good growth rate there. Let's take a look at the balance sheet. Current ratio is 1.9 versus 2.1. That is good. Debt to equity, wow, only 0.1 versus 0.7 for the industry. So not much debt at all at First Solar. We do see that they have a net profit margin, very good, 29.7%. Industry a negative 14. Return on equity, 15.5% for First Solar versus 9.5 for the industry. Free cash flow for solar, unfortunately, a negative 900. I believe this is, I'm going to say billion.
900
million. Must be million, right? Industry 500 million. So that's not good. We like free cash flow companies that are positive.
And I did look at that a little bit on the free cash flow. And what's happening is they're having a lot of capital expenditures currently. This year for 2025, CapEx is estimated around $1.24 billion. So they're investing a lot in the business right now, which is producing that negative free cash flow. And free cash flow is your cash flow minus CapEx.
Yeah.
Now, that CapEx is expected to fall off materially. So 2025, analysts are projecting free cash flow of negative $472 million. Not good, obviously.
Right, and CapEx is capital expenditures. Yeah, be my, what's
2026, though, because CapEx is expected to kind of fall off, they're looking for free cash flow of $1.39 billion, and then 2027, they're looking for free cash flow to expand even further to $2.24 billion. So it seems like this capital expenditure ramp that they've had is really kind of on the back end. This is one thing I'd want to know if I was looking at buying the stock, because that could be all of a sudden now a cash-generating machine here over the next couple of years.
And that means buying back stock, maybe paying a dividend, which they don't now. So, yeah, that's a good point to bring up.
Yeah, and the other thing I like about First Solar, too, it is basically U.S. company predominantly. They have manufacturing in the U.S. and in India, but about 90% of their sales take place in the U.S. And then India is their next largest market. Let's see, 2024, they had sales there of, 201 million. So it's a much smaller part of the business. It is a U.S. business. As I said, they primarily sell to businesses too, and utility projects, things like that. They're not selling to residents, where I think even the changes in the tax code potentially is not going to stop an Apple or a Microsoft or these other companies that want to be green and care about carbon footprint from stopping the solar expansion. I think this is much more isolated than a Sunrun type company as well. But let's look at the numbers. I mean, as you can tell, I might be a little bit excited about this one. Kind of looked ahead here, but the current price for First Solar is $158.38. 52-week range, the low here, $116.56, and the high, $306.77. It's really kind of been lumped in with concerns over, I'm going to say, the green spending and that slowdown or the shift that may occur under the Trump administration. But this is what is very intriguing. You got to December 2026, estimated earnings per share here, $24.14. Gives you a target sell price of $400.72. I mean, it trades at about 6.5 times those 2026 earnings. And this is crazy too. This year, earnings are estimated to grow 28%. Next year, they're looking for earnings growth of 56%. Again, I think they are having this investment cycle start to wind down a little bit, and they should start profiting on an earnings basis and a free cash flow basis over the next few years.
And I think you also said too, I mean, look at your notes there, that this company doesn't just sell to homeowners, but for big businesses.
They don't sell to homeowners.
They don't sell. So you can't get, I mean, the solar panels, they make none for homeowners?
They had discussions with Sunrun about a potential partnership, but I guess even the modules that they currently make, they're not really ideal for homes. Or, the big solar fields, they really work with utility companies. They said Apple was one of their big customers. So, they're not really selling to homeowners, which I think is the market that's going to get hit much harder.
So like businesses want their solar panels on the roof or it's a big project is what it is.
Mm-hmm. Over the solar fields. Yeah. But the other thing too that I looked at, I know we're kind of short on time, but I wanted to bring this up because let's even say the IRA was removed, right? The manufacturing credits that this company would get. First Solar is expected to receive about $700 million to $1 billion annually in what's known as PTCs, or production tax credits, once its new factories are fully ramped. If you remove that completely, so it goes to zero, well, that would actually hit them pretty hard, as it could cut earnings as an estimate by around 33 to 50%. But I look at this and saying, well, it trades at 6.5 times earnings. You kind of have this margin of safety built in. Even if the IRA was removed completely, First Solar would still be a profitable business, which I was pretty amazed by.
I do see there's 30 analysts, big range on the earnings. So $14.90 at the low side, $28.46 on the high side. So that does give me a little caution there.
I guarantee, what did I say? 50%. So one person might be saying that, hey, you're going to lose a lot of the IRA, which I don't think is going to happen, because President Trump wants manufacturing here in the U.S. That is why they're getting these tax credits, is because they're manufacturing the solar panels in the U.S.
And if it does only earn $15 a share going forward, that's still a PE of 10.
Yeah, I mean, it's a good value. I mean, I'm very surprised by the valuation of this business.
Yeah. Well, I think it's worth watching.
I think it's very intriguing. I think it's an interesting business that could do very well here.
Okay.